Kevin, whose camp are you in?
Yeah, I mean, I'm very hopeful on the productivity boom that we've seen in the last couple of quarters, but I'm not sure if it could be sustained going forward, given the weakness that we've seen in CapEx. Typically, if you see a pickup in CapEx like you did in the wake of the presidential election, eventually productivity should follow. But the last couple of quarters have been pretty weak from that perspective. So I don't think the dial has changed very much in the last couple of quarters.
I was just going to say, Kevin, if we could have had a year or two of the tax cuts without the trade war, we would know if we would get the capital spending response that is going to be required in order to boost the productivity that will change the potential trend rate of the economy and create a possibility. I thought a change of the speed limit to 2.5 was possible, within reach. I don't know if it's global economic weakness and the trade war that have us down at 2% rather than what could be 2.5, and I think an ambitious 3.
That's a great point. And I think the big thing here is, so far, the economy has downshifted relative to last year when we did get 3% growth. Growth is closer to, the first quarter was 3.1. This latest revision of GDP puts it at 2 in the second quarter. But I am very concerned about the outlook. I think there's kind of a dark shadow here on the outlook with regard to the lingering uncertainty about trade policy going forward. And I think, eventually, there's no doubt about it. The consumer still seems to be in pretty good shape. Today's jobless claims data suggests the labor market is signaling a pretty healthy labor market still.
Hey, Kevin, what if China, what if we remove all tariffs eventually? Suddenly there's this, you hear the music, like, oh, and then things open up. Tariffs are removed. They open up their markets to the United States. Come, we will play fair. We will not steal anymore. Let's say that happens next month. Just dreaming something like that, and everything works, and it's crazy, what people think is a crazy trade war. What if it actually changes behavior and makes the world a better place for free trade? Then do we get to 3% now that all this has been lifted?
I think so. If that is the case, Steve? Where everything is resolved and it's a kind of a best case rosy scenario, I think that's certainly possible.
That's what we're trying to do, I think.
The consumer is still holding in there. It's just, I worry that this divergence between business investment and the consumer finally catches up with the consumer. Not so much this year, but into next year. I'm concerned about, the underlying fundamentals of the economy. Don't forget, you're heading into an election year. There could be business decision makers in kind of a wait-and-see approach to the outlook, in addition to uncertainty about trade policy. I think that alone probably holds back business investment next year. I mean, business investment typically leads consumer spending. So, yes, the consumer is in better shape than we thought. Employment growth is still solid enough. You have had some moderation in employment growth. The BLS just came out recently with their benchmark preliminary estimate to payroll growth, and they marked down payroll growth pretty noticeably, or they're expected to mark it down. We won't get those data till early 2020, but it does suggest there's been a downshift in hiring as well. Claims are good, and they're still at a very low level that I wouldn't get too excited. But I think the economy is downshifting here, and I think we're probably not going to see that dramatic of a slowing until next year, when you're probably growing below trend. And trend growth is somewhere probably around 1.8 or so.